These three stocks are just begging to be shorted, okay? First off, read this disclaimer carefully. Let's quickly look at what's happening with the portfolios. I've done some changes here. I call them now the megatrends, and you can see that the very significant outperformance vis-a-vis the S&P 500, and there are some extreme moves, of course, in the pandemic stocks. The macro themes, and you also have the holograms really beating the market big time. Education 2.0 as well. And I also have some other interesting themes here. The police violence theme. As far as this entire topic goes, I definitively think that law and order is like, a good idea. Then again, there are different companies that are working on non-lethal ways to capture suspects. And also there's, surveillance technology that makes the entire process more transparent. Okay, so let's look at the first company begging for a short, and that is actually Tesla. To be perfectly clear, I am long-term bullish on Tesla and Elon Musk. I think that he is a transportation prodigy, and this is a fantastic company and all of that. But even a company that's really good can go too far. Here is the seasonality of the stock, the percentage of months in which Tesla closes higher than it opened between these periods. You can see that the current period is usually one of the weaker periods for the Tesla stock. Okay? And if you look at the chart, definitively not seeing weakness. I mean, this really puts the entire move into perspective. This right here is definitively a bubble. So even though I'm bullish on Tesla, this is ridiculous. This is actually a very bad idea. As a Tesla bull, I do not like this because bubbles, they never end well. They can do a lot of damage to a chart. So let's actually put this in perspective, okay? So let's actually measure how far away we are from this 200-week moving average to make the move more vivid, okay? So this is how far we are away. Okay, let's actually make it pink to make it a bit more visible. So we are very far away from the 200-week moving average. Let's look at some previous rallies, okay? Pretty ridiculous, right? Look at this rally here. We attached the 200-week moving average to the high. Okay, I think you get the message. We are extremely far away from one of the key support levels. So from a charting perspective, this is just ridiculous. We are very overbought. The accumulation distribution line is not actually corroborating the most recent rally. That's a bit of a bearish divergence. 57% correlation with S&P 500. Let's look at the daily data points. I mean, the bulls are certainly in control, but we are just ridiculously overextended. And you can see that historically there usually are pullbacks, like here and here. When there is a pullback in Tesla, it can be quite significant. So from this high to, well, let's do it accurately, like this. From this high to this low, that's minus 24%, and that's a good short. And you also have the options market for more leverage. So yeah, this is just ridiculously overextended. If we go here to Saks.com, they have a number 3 hold, an F value score, A growth, and B momentum. So definitively just ridiculously overextended. So this one is begging for a short. That's Tesla. Next on the list is actually Apple. Apple, it's a company that I am bullish long term, but I'm not like hyper bullish because the problem with Apple is that it's very big and it's kind of lost its spark, after Steve Jobs. It doesn't have that genius anymore, and I mean, what is the latest huge innovation from Apple? I'm uncertain about the future, but it's a good performing stock, and I'm kind of bullish, but not super bullish. When it comes to the seasonality of Apple, there usually is some weakness in the current period. October is strong though, but given that we have seen extreme strength so far, we are due this weakness, so we didn't have this weakness, this seasonality. Hence, it's kind of shifted. Okay, so let's now look at the Apple stock, like this. Apple. Let's look at the weekly data points. So here you have, the long-term picture for Apple, and going back to the 2000s, you can see that pullbacks they are frequent, one of the key pullback levels here, and this also happens during a bull market. During a bull market, it likes to pull back to the red 200-week moving average. That's a theme. If we do some measurement, if we measure from this recent high to the 200-week moving average like that, and then we go here. Yeah, very overextended for sure. I mean, pretty extremely overextended. So this is also one of those ridiculous moves. Unlike with Tesla, which still is very dominated by the bulls, we are seeing some initial weakness here from Apple, and there is some exhaustion here. So this is also one of those that historically is very due a pullback, a correction. They usually happen, and this one it weighs a lot. So if we do get a correction here in Apple, which we have all reason to expect, it will have a major impact on quite a few indexes. Yeah, very overbought on the RSI, but the accumulation distribution line actually did kind of corroborate this rally. 81% correlation with S&P 500. If we go to the daily data points, you can see here that the last few days there's been some initial signs of exhaustion. You do have those stock split happening, but it doesn't really have, it doesn't matter, you know, it might fool some newcoming investors, but I would be surprised if, like, you know, the big institutional funds are actually going to be impacted by that. So yeah, begging for a pullback for sure. That's Apple. If we go here to Saks.com, they do have a number of strong buy on Apple, but they do have an F value score, degrowth and F momentum. So the style scores are quite mediocre, and the dividend is not that juicy. It's 0.66%. So that's Apple. Next on the list is a semiconductor stock, Nvidia. Long term, I am bullish on Nvidia. I'm quite bullish on Nvidia. The semiconductor space is very strong. A lot of supporting themes just fueling that sector. Nvidia is also, you know, one of the leaders in the space. Let's get the charts like that. But here again, it's one of those theories about a ridiculous move. You see that it likes to have pullbacks, you know, even during a bull market. So this was the post-financial crisis bull market. There can be some very serious pullbacks. Like this pullback here was 52% plunge. That's huge. There are also a big pullback. And here again, we are super far away from the support level if you use the 200-week, which is a very long-term support level, but it's been relevant in the past. Like there and here. So you can see that we are very overextended. The bulls are still in control, but it's very euphoric. You gotta ask yourself the question, if you are bearish on this one, how much risk are you actually taking? How much more explosive upside is there left in Nvidia? If you look at the daily data points, the volume is corroborating the rally so far. We are overbought here on the RSI, and there's been frequent pullbacks in the past. Hence, this is also one of those I think is begging for a pullback. Looking at the seasonality, you can see that there usually is some deterioration here heading into September, October. We haven't had it so far, so we kind of are due. Looking at Saks.com, it's a number 3 hold, F value score, A growth, C momentum. Okay. So, of course, I'm all about letting the trend be your friend, of course. Don't fight the trend. That also begs a question. You can see that the primary long-term trend over many years is that these three stocks, they like to have pullbacks. That's a key trend. So the current euphoric rally is fighting the primary long-term trend for these stocks. Hence, even though you want to time your bearish position carefully, you don't want to, you don't want to get ravaged by the bulls. Hence, look for some initial weakness, and then you can become bearish. You could go short selling, or you could use options. There's a lot of option strategies that benefit from pullbacks. Yeah. Whatever you do, of course, don't fight the trend, and may the trend be with you.